I think Oatly investors have been taken for a ride. And, I honestly am upset about how many different personalities out there have sort of, pumped up and hyped this particular stock when the company itself may have a decent product. All right. I'm not really that much into dairy alternatives. I mean, I'll occasionally enjoy some almond milk or something like that, but oat milk, I just see that as just yet another fad product. Now, other people in my last video on Oatly have told me I'm wrong. They've told me, hey, this has the best foam factor. They actually have by far the best dairy alternative, and it's the best tasting, apparently, according to some people anyway. But one thing I have pointed out with regards to a lot of different companies is that just because you have the best tasting product or the best product in your particular niche doesn't make you the best business, okay? That argument gets brought up a lot. Like, well, they have the best product. I like their product the most. Doesn't mean that they're the best run business. You can have a great product and still have a business go to zero because of how it's managed. Now, when you look at the numbers for Oatly, you see negative net income, negative operating cash flow. You see revenue growth, which, on the surface is, a good thing, but you see a continued failure to translate that into anything positive on the bottom line. Both earnings per share and free cash flow per share are negative every quarter. They're burning cash, maybe at a slightly slower rate than they used to be, but still burning it pretty quickly nonetheless. And time is not on their side at the moment, because in order to raise capital to survive, if they continue to burn cash and can't become profitable in terms of either free cash flow or earnings per share. I mean, free cash flow at least would mean that more cash is coming in than going out every quarter. And I could see them surviving even if they were GAAP negative still on EPS. But the fact of the matter is, we see operating margins continue to be deeply in the negative, profit margins deeply in the negative, free cash flow margins deeply in the negative. Now, there is some improvement on those free cash flow margins. Don't get me wrong, but when you're in a situation like you are, where this has been going on and on and on, like with Oatly, your share price is low, and the only options you have are to take on debt at a higher interest rate than you needed to a couple years ago, or issue shares at lower prices than what you could have years ago. All right. Yeah, there was a point in time where Oatly was over $20 a share. If you had to issue shares in order to fund your operations at that time, things seemed pretty sweet. Didn't seem like that big of a problem. But when you've plummeted to 89 cents per share and you need money to fund your operation, that's a pretty dangerous position to be in, because as you continue to flood the market with shares that the market is telling you they don't even want, it's just going to drop the price even lower, making more people want to get out before they lose their whole investment. It's a vicious circle. Now, they have $340 million of cash, at least as of the last earnings release. Now, that buys them a certain amount of time. Their free cash flow was negative $54 million, I think, last quarter. So this would get them through maybe a year and a half at that, if they maintained that exact burn rate, before they would be facing bankruptcy. So sometime in like late 2024, probably, if they don't figure something out, we might be hearing them discuss the need to potentially file for bankruptcy protection as an option. Now, that could be, of course, averted if they can figure out how to run their operation efficiently. All right. Can they cut costs? That's the question. Can they do something to turn around that deeply negative operating margin and free cash flow margin into at least the slight positives? Even if they had 1 cent per share in positive free cash flow margin, people would at least be able to say, okay, at least they can stand on their own 2 feet and they don't have to dilute or take out debt just to survive another day anymore. Now, shareholders' equity, still positive, but dropping rapidly. And I think this is the reason why the share price is dropping rapidly. Book value per share, roughly in line with where the stock is trading. So I think as this goes lower, people see that they think it's heading in a certain direction. And honestly, at this point, I think they could be correct that Oatly may not be long for this world. My last video, I said, is Oatly the next tattooed chef? And, I personally see a lot of similarities. Okay? They have basically an alternative product that is more popular with a smaller portion of the overall consumer base than the traditional alternative, and it's more expensive, to be honest with you. Milk substitutes tend to be pricier on the shelf than just simple cow's milk, right, at the grocery store. So people who maybe either are lactose intolerant or like really strictly plant-based or whatever, they might still buy it, but they're still, they're competing against almond milk, they're competing against cashew milk, they're competing against other brands of oat milk. And frankly, people who just get it as a luxury, but they're not like super strict about it, when it comes down to it, they'll revert to what's less expensive during tough economic times. What is everybody saying is either here already or on the horizon? Recession, recession, recession. You hear it over and over again. So that, I don't think, bodes well for that revenue growth that we were saying might be the one positive thing we have to hang on to with this company. If people don't want to buy the more expensive dairy alternatives, in spite of the really awesome foam factor that it apparently has, it could hurt their ability to grow revenue. And it seems like they won't be able to improve their efficiency without growing their top line revenue, as it does seem like their free cash flow margin gets closer to break even as they continue to grow, but it's still so far in the negative that it more and more seems like time is just not on the side of Oatly. So let me know in the comments below if you have any Oatly stock. If you personally love their product, whether or not you own their stock, and if you think that they're going to survive to, say, 2025. Also, make sure you like and subscribe. Really helps out the channel. And we also have a live show every Saturday. I co-host with the Ryan Dengler Show on YouTube. Link to that will be in the description, of course. Until next time, everybody. See you around.